Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement with Chris Mcintire. Mcintire Retirement Services, Northwest Ohio's retirement planning resource.
Welcome into the program. This is your Game Plan for Retirement, Northwestern Ohio's resource for a common sense approach to planning for your financial future. He is president and founder of Mcintire Retirement Services. Chris Mcintire with us once again. Chris, welcome back in.
Hey, good to be with you, Peter. How's everybody?
We are doing well on this side, Chris, and I know you're on a little bit of a hiatus away from the office, enjoying the Outer Banks in North Carolina.
Yeah, we sure are, and it's a pleasure to be down here. It's nice to be able to work from home, and who would have thought a year ago that Zoom would have taken care of this for us? It's actually a vacation, or a workcation, we call it, that we normally do around tax time anyway, just to get away from the office to work on the business versus in it as much. And, it's kind of been like a normal work day. The view's just different. We're sitting here looking at Currituck Sound right out here to our immediate, I guess I'll call it west anyway, and just beautiful. Yep, we love it down here.
Can't complain about that too much, I don't think.
No, not really. And we're thankful for technology that has allowed this to happen. But believe it or not, this was a trip we were going to take a year ago, and it got put on hold. We had the truck all loaded up, ready to go, and everything shut down on March 13th of 2020, as we all remember. And, look at where we are a year ahead, a year removed from that, and still everybody being ever so cautious, and thankfully the vaccines are rolling out, case numbers coming down here in the United States, and as more and more people choose to get the vaccine. I know that's a political issue here, or a hot button issue. Some people want it, some people do not, but I'm happy to have had it, and can get back to normal here, and be, as you and I were talking about before we kicked the show off, is it's nice to go back and get some maintenance done. I'd like to exercise, and, it's been nice to go back and get some treatments on my elbow and my knee, and almost feel like I'm 50 again.
Yeah. Well, I've had on some of my social apps memories from a year ago popping up, and it was, I did all of the chores around the house on the first day of quarantine, and what was I going to do for the next 2 weeks? And here we are, a year later. We've had plenty of time to do those honey-do list items around the house. We'll say that. But Chris, a lot of things that still have gone undone, or the attention has not been paid to them, are some of the financial matters. And I've heard reports that people are doing a little bit better in the pandemic with their savings rate. It's almost like a post-depression era mindset where people are saving a heck of a lot more money, but still some of the routine maintenance needs to have attention paid to it, particularly in what is one of our largest opportunities to save for retirement. The Americans who save in 401ks for retirement need to be doing the things, need to understand some of the opportunities that they have to make the best use of that tool. And so that's what we'll be talking about on today's program.
Well stated, Peter. And, we've had more people call in from that, have been loyal listeners to the show here to, make appointments with us to say, look, how do we get back on track? We kind of went into a panic mode. We got a whole bunch of money sitting in cash. I've been very conservative in my 401k, my investment allocations. What do we do? And, we're going to be holding some of our workshops here later on in the summer as things open up, on, getting restarted, if you will, and, still waiting on some of the venues that we hold these events to, kind of fully open. And we certainly anticipate that, all those will go forward, but we'll be holding some public events on those as well, and we'll advertise them here on the radio show as well.
Well, fantastic. If you'd like to go ahead and jump on any of those ahead of time, be proactive, or if you would like to get your plan put together, Chris Mcintire does always make his time available for listeners to this program for one-on-one planning. If you'd like to get your game plan for retirement put together, or again, if you'd like in one of those upcoming group settings, or even one of the webinars that Chris holds, if you'd like to Learn a little bit more, make sure that you're making well thought through and informed decisions. Pick up the phone, give a call, 800-868-1194, 800-868-1194, 800-868-1194. So Chris, the everything in the financial world has pros and cons, including the 401k. There's lots of benefits to it. I mean, some of the benefits, are what is advertised, that it's automatic, you get the savings done, that there's potentially a match on the 401k. These are good things, but some of those also come along with some drawbacks as well. And we need to understand both sides.
Certainly we do, and the win-win part of the 401k, Peter, is, at regular intervals, I'm putting money into the stock market, a strategy, as many people know, that's called dollar cost averaging. I buy more shares on a month when the market is down, fewer shares when the market is high, kind of that Warren Buffett mentality. That's one of the win-wins. The other one is, hey, my employer's matching 25% of what I put in, or 50%, depending on where you work. I mean, that's an immediate return on your investment. I put in $100, they put in 50. I mean, there's a 50% rate of return, and then you get the continued growth on somebody else's money. And so, those are a couple of the win-wins, the regular investment piece. So, once you get started, it doesn't take a lot of discipline. I mean, it just comes out of your check, and you're just the way your taxes get paid and whatnot. And then, the getting the free money, if you will.
Yeah, I think we have a habit, Chris. It's easy for us, if the money comes home, if we get it in our pocket or in our bank account, for it to find a way to be spent. And so taking that discipline, as you said, out of the equation, making sure that the savings gets done, is a way that we can make more progress. The dollar cost averaging, obviously a benefit, but because it is systematic and automatic and kind of out of sight, out of mind, I think that people are missing some of the routine maintenance that could be done. They are not paying as much attention to the investment allocation inside of the 401k as maybe they should. And we don't get a lot of proactive guidance on that either.
No, not necessarily. It's, we could call it turnkey, where, hey, I put the money in every week. It goes into a fund that I selected, and it's probably one of the retirement funds, the retirement lifestyle, if you will. Those have become ever more popular, and they do have their own drawbacks as well, because they don't adjust economically. They only adjust according to what the calendar says. And as we all know, there are reasons to make adjustments based off of the economics, not necessarily the calendar. If we were making all the decisions off of the calendar, we'd sell in May and go away and come back in about Turkey Day, is the old cliche, if you will.
Yep. But Chris, the not adjusting for economic conditions, that is something that maybe we should do, but also over time, our allocation should probably change. If we started, say, 10 years ago with a 60-40 allocation, maybe a little bit more aggressive because we were younger, and then have not rebalanced, there have been a lot of gains on the table that maybe we have not captured. And at this point in time, we're probably overexposed to risk. The 60% that we had allocated to equities is probably now a much larger percentage of the total account balance. And therefore, if there's another downturn, we might lose more than we're comfortable with.
And these stimulus driven packages that have fueled the stock market growth here has probably led to more people heavily, more than heavy in the equity allocations, if you will, because, hey, we're all hearing record numbers in the stock market, and things are on the recovery side. But remember, that came at a cost of trillions of dollars. So have we already bought into the future with some of those returns based off of economic stimulus instead of economic reality? And like Peter says, if you've done very well in the stock side of things and you've gotten a little bit closer to retirement, hey, it may make sense to adjust your strategy. We have a platform where we can help people manage their current 401ks where they work if they don't have the ability to take money out of them and, get them into an IRA, kind of pre-retirement, if you will. I think we'll go through that as the show goes on here. But that is a service that we have available as well to help you manage within your current 401k, analyze the fund selection that you have. And, is there something more or better than a retirement lifestyle 2035 fund, because that's the one you checked off to get started.
Well, if you need any help, if you feel like you have not gotten guidance on that 401k, if you just want to be better educated to make those informed decisions with it, or know what to do at key intervals along the way, or just a progress check, make sure that you are making the progress, hitting the milestones and benchmarks that you need to along the way, choosing the best options inside the 401k. That is something that is available to you. We don't often get it at the workplace. The human resources officer doesn't want to take on that liability, but that's why we seek out the help of a qualified, experienced professional. Chris Mcintire can help you with that. We'll provide those recommendations for you. Pick up the phone, give a call, 800-868-1194. That's 800-868-1194. Now, Chris, you mentioned the match. Obviously, another huge benefit of many of our 401ks. I don't think that you could really say there's any other place in the financial world where you get that kind of immediate guaranteed return on your money. I put $1 in and suddenly there's $1.50 in my account, or $1.25, or maybe $2. That's a fantastic incentive for us to save. I've heard the term free money, and I've always sort of taken issue with that, because we work for it. We're going to put in the same amount of work, whether we get it or not. It's just an incentive to take our own planning and our financial future seriously. So especially if that match is on the table, I believe you would encourage people not to overlook it, not to miss it. And probably that's the first and primary place where we should be making retirement investments.
Yeah, without question, Peter. And someone who's self-employed telling you that to take advantage of the extra contributions, or we'll call it free money here for the purpose of the show, you absolutely want to take advantage of that. I sure as heck would.
Absolutely. Well, Chris, what about the decision between the tax deferred or the Roth, which is increasingly available? Because I know another one of the big benefits that was touted about the 401k was you can defer and delay paying that tax bill. You can push that off down the road, save more money. There'll be compound interest on the money that you didn't pay tax on, triple compounding, they called it. What about that? Is that still the way we need to go? Or is the fact that the Roth 401k is becoming more popular, is becoming more widely available, a sign that maybe we need to shift our paradigm on that?
Yeah, absolutely. And I'm a big Roth geek, with tax rates being at historically low levels now. Should we be paying taxes on the money we're putting into our retirement plan now to get tax-free growth in the future? And even just in the month of March there, Peter, the Biden administration came out talking about, potential tax increases. We don't know where they'll be, if it'll be on the corporate side or the upper income side, but that's the opening of the gate. And, sometimes when that gate opens up, it can be hard to close. And, we'll do certain savers who have been very good savers and have $1.5 million in a 401k account. Do you understand what the taxable ramifications of that are going to be into your retirement? And shouldn't you look at some other strategies, that may be in your best interest, like a Roth IRA or a Roth 401k or Roth conversions? And, keep listening to the show. We do a lot of discussion on that. I really like, cash value life insurance works very well, can be a very good income vehicle for you as well when structured properly. So, these are just certain tools. Like Peter said here, the 401k is not a retirement strategy. It's a tool in the overall retirement plan, if you will. So, long-term care is in there. Life insurance could be in there. Income planning would be in there. Estate planning would be in there as well. So again, the 401k is one tool of many that you should utilize as you go through your retirement planning process.
But does not constitute a plan. You need to understand how the tool is incorporated into the plan, how the tool can be utilized to help you build and construct the plan. And that's what the process there at Mcintire Retirement Services is truly all about. Chris Mcintire will help you construct that plan using the tools that that you have available. If you'd like to get your game plan for retirement, a snapshot of where you are currently, a discussion of and documentation of your goals, write those down so you can work to achieve them, and then recommendations on how to work to achieve them, the steps that you should take, the action items, the timeline for you to execute. Not 1,000 pages of financial jargon here, ladies and gentlemen. This is simple, concise, easy to understand language, steps that you can take and follow in order to turn your goals into future reality. Pick up the phone and give Chris Mcintire a call to get that game plan for retirement. 800-868-1194. That's 800-868-1194. 800-868-1194, the number to call. Chris, there are some opportunities to take more control of those 401k funds. And again, this is a tool. That tool served us well in many cases in building toward retirement, but may not be the best tool for us once we do retire, once we start needing to live off of income from our retirement assets.
You're exactly right. Just having a large dollar amount invested someplace doesn't mean that you're going to have a successful retirement income plan. Bad things can happen in the stock market, the bond market. We've advocated with having an income plan separate from your investment plan to have those, ordinary daily living expenses taken care of or guaranteed, if you will. And then also, in considerations, what would happen if you passed away? How is your spouse's financial well-being going to be impacted by this? And, we would, for 20 years, we've been carving off income allocation strategies here, Peter, and, using safe money to help accomplish some of these pieces as well, minimizing the fee structure, the stock market risk, the bond market risk, having the ability to have an income that can potentially increase over your lifetime to combat against inflation, like we're seeing right now with food prices, gasoline's going up once again. Those are things
just
that
about
are
everything.
certainly is. Yeah. But, a lot of things are, the supply chain's kind of goofy right now with, trying to get appliances and if you're building a house, the price of lumber and everything like that. So, those are things you're going to be facing here is going to be the inflation side and, making sure that your guaranteed income can help keep pace with that increasing need to maintain a standard of living. It doesn't mean the stock market's always going to benefit you. There are times when, over a long period of time, look in the 70s, the stock market had dismal performance in times of higher inflation. Dismal.
Yeah, a lot of people think, well, if inflation is a factor, the stock market's going to carry me through and it's going to coincide so that my money grows at the same time. In fact, what history has shown is generally during those periods of high inflation, there's underperformance in the market. It's sort of a double whammy in the wrong direction. And so you need to understand all the alternatives and all of the tools that you have available because there may be other alternatives and options to better combat inflation if that is to continue to be a factor. And again, that's why you consult with a qualified, experienced professional. Chris Mcintire offering his time for you, offering to put that game plan for retirement together with you. 800-868-1194. That's 800-868-1194. 800-868-1194. So Chris, you sort of mentioned some other alternatives and options there. It sounds like you have in your mind a bit of an order of operations on how and when certain tools should be utilized. Capture the match in the 401k first and foremost, but maybe pivot outside of the 401k if we're contributing more than the match, or is that something we should continue to do without question?
Peter, when people typically hit the age of 59 and a half, they have the ability to, take some money from their 401k, even if they're putting money into it, they can carve off a segment and, just for figuring purposes, let's say they pull out $200,000 and they want to start converting some of that money into a Roth, or they want to look at other investment strategies. They want to start building their income plan and just, be again, the 401k is one piece of is a tool to get you to retirement. It's usually not the tool that you use to get you through retirement. So in many cases, we are helping people in that 59 and a half range do their pre-retirement planning. And then also for those that are listening today, you may have a 401k from a different job that you've left parked there. And, once you separated from service, regardless of age, you can roll that into an IRA, work to convert that to a Roth IRA, look at, is that one of the key foundational planning aspects of your retirement income plan, for example. So yeah, a lot of flexibility, especially around that 59 and a half age is where it typically, starts to get put in a higher motion, higher speed, Peter.
And Chris, I know you have talked before about how you feel your job as a planner is to help your clients, help savers and investors maximize the areas that they have control over, minimize the areas that they cannot control. And by taking some of those steps that you mentioned, taking more control and ownership over the funds inside of our 401k, it helps to accomplish those goals, ladies and gentlemen. Maximize control over certain elements of your planning, minimize areas where you don't have control. And so again, if you'd like to understand where you've got those opportunities and options along the way, if you'd like to leverage your money, make informed decisions with it, pick up the phone, give Chris Mcintire a call, get that game plan for retirement, that timeline of recommendations. It'll outline where and when you have those opportunities for you. Pick up the phone, give a call, no cost, no charge, no benefit to procrastinate, really no downside to having that plan in place. 800-868-1194. That's 800-868-1194. Now, Chris, you mentioned a little bit about those target date funds, and that seems to be more and more increasingly a default of the 401ks, but these are not perfect tools. If my intended retirement date was 2030, I couldn't just invest in a 2030 fund and think that it's going to take care of the rest. I've still got to monitor it. I still got to pay attention. And the 401k statements oftentimes show us some projection of the amount of income we'll be able to generate from them. That's not always a reliable figure either, is it?
Oh, it's certainly not guaranteed. It is just merely a suggestion that the 401k provider is giving you, and based off of a $500,000 401k balance, you can expect to get $25,000 a year. That's a 5% withdrawal, for just as an example. And Peter and I would tell you that 5% withdrawal rate's a pretty hard thing to continue to achieve over and over again. We prefer to create income streams out of contractually guaranteed pieces, of the overall retirement plan. And, nothing against the Wall Street side of things, because we represent them with our managed book of business through TD Ameritrade and Brookstone Capital Management is, there are plenty of risk associated with investments. And for most folks that go into retirement, if you think you're in a 2021 retirement fund, for example, that's going to still have a significant amount of money directly invested in stocks. And for some of you, that might be okay. For some of you, you might be incredibly conservative and you want to look at what other alternatives that you may have available on the safe money side of things. And we certainly can bring that to the table, but that's, outside of your typical Wall Street stock, bond, mutual fund type of thinking.
Yeah. Chris, you've given the example, historic example previously, that in the Great Recession, 2007, the 2010 target date fund was kind of the largest fund by volume of dollars invested at that time. And so theoretically, this is a fund that is designed for people who intend to retire in only 3 years at that point in time. Just retirement's 3 years away. And during the Great Recession, during that year, that fund lost like 30+%. And then over the course of the 2-year span of the Great Recession, it lost almost 40%. This is a fund that we're intending to use those dollars in retirement in just a couple years. So again, you talked about how target date funds don't adjust for economic conditions, and that might be the downside or the drawback to the benefits that they can provide that we need to be aware of and pay attention to.
Sure. And they, had some regulatory issues. They came under fire, for example, was Company A's 2030 fund the same thing as Company B's, for example, or was the ratio of stock bonds just, a lot of disparity between those based on the companies? And, the average 401k investor who, isn't a geek and watches CNBC all day long, or Fox Business, whatever your choice is, is assuming certain, presumptions when they go into a 2030 type retirement fund, thinking that it's going to be safe in 2030, for example. And it certainly is not the case. It is invested, in things that change in price every single day. And your statements are reflective of that.
Well, a couple other things you've got on one list here is that fees in 401ks are something to be aware of. These are not nonprofit charitable institutions that offer these 401ks. There are fees, there are costs, there are expenses. That probably could deserve a whole program in and of itself. In fact, I think 60 Minutes did an expose that was like an hour long, talking about all of the fees inside of 401ks, how they're not often very apparent or disclosed. So something to be aware of there. The costs of your investments. Don't take loans from your 401k. Don't tap into it like a piggy bank, right, Chris? This is retirement money. Let's leave those dollars there as much as possible for retirement. If we can at all avoid taking a loan, we should.
Yeah, no question about that, Peter. And again, sometimes life is what happens to plans, but by and large, you want that to be hands off. And I think it's probably a fair statement to say that once you go in and take a loan from it, the second time it'll get even easier, and the third time even easier than that. So sometimes it's better not to open that Pandora's box, if you will. Let that 401k set for long-term growth. Build yourself a cash reserve, that many people say needs to be 3 to 6 months of your living expenses. We would certainly be an advocate for that as well.
Well, Chris, you've got this other list here, 50 401k mistakes. These are items that are unfortunately commonly take missteps, commonly overlooked. These are opportunities that people either miss or things that they do with their 401k that can lead to less than optimal results. Not participating in the 401k, that's number one. That's a pretty obvious one if it's available. Not capturing the match if it's available. Not starting as soon as we are eligible. Not maximizing the available match. Not utilizing the Roth option. Not reviewing statements. Not rebalancing. All of these things are pretty elemental to 401k progress and success.
Yeah, they certainly are. Number of key fundamentals that you certainly want to continue to take advantage of. And, adjusting for your risk tolerance is certainly another one. As you get closer to retirement, it's about preserving what you have created. And, that being said, if somebody's 60 years old and they're 5 years from retirement, doesn't mean they need to be completely safe. You still need to monitor and adjust your overall risk tolerances. Some of those dollars can be invested for long-term growth. And sometimes that's one of our challenges, is putting that in perspective for everyone as well.
Now, there's a few things on this list, Chris, that I did have questions about. If you plan to retire at 55 or before 59 and a half, there may be some reason to leave a 401k, even an older 401k, alone. Or if you've got the opportunity to purchase company stock within the plan, you mentioned something to be careful with.
Absolutely. And especially with company stock inside the retirement plan, there's a special tax provision that may make sense for you to take advantage of that. And it's called net unrealized appreciation. So, for example, Church & Dwight is a company that makes Arm & Hammer baking soda, and their stock has appreciated over a long period of time. So for people that have that stock in their 401k, they need to understand what net unrealized appreciation is, and should they be taking advantage of that when they do their rollover. That's a very technical area. We just want to let you know to, hey, pay extra attention there. And you definitely want to work with an expert on those types of things, and we can handle that for you.
When it's time to use that 401k or move that 401k, Chris, not something that's necessarily difficult, but something that you don't want to make any mistakes or missteps with. You don't want to encounter any unintended consequences, taxes, or penalties. And so that's why, it's one of the reasons why you offer your services, to help people better understand the tool that they have available, how to use it properly, and then maybe when it's time to move on from that tool and create more of the toolbox that will be essential for them throughout retirement.
Yeah, Peter, we do a lot of different phases for folks. Some folks it's starting phase one, and that might be moving money from an old 401k and getting it out of an old plan. For some folks, it might be starting the income base, a safe money strategy, to helping them get their estate planning documents with good qualified attorneys here, to working on the tax side of things and understanding that, again, somebody's got to be the quarterback. And I think that's probably where we have a niche in the marketplace. And then also being the independent without any sort of corporate governance over top of our decision-making process.
Well, if you would like some guidance on your 401k, pick up the phone, give Chris McIntire Retirement Services a call. If you'd like this list of the 50 401k mistakes, just to review it on your own, see if you are perhaps making any of these, or if you would like to get that game plan for retirement put together for your situation, pick up the phone, give a call, 800-868-1194. Or if you're watching the video, you can always click on the link below in the description to get any of these resources or to reserve your time with Chris McIntire. I always encourage you to like, subscribe, share, hit the bell if you're watching that video so you can be notified when the next edition of your game plan for retirement is available. But again, the true value of the program, the big offer that Chris makes is to get that plan put together for you at McIntire Retirement Services. They help savers and investors better determine their outcome by getting a plan put together to help them make their goals, their realities. And if you would like to have that plan, pick up the phone, give a call, 800-868-1194. That's 800-868-1194. Chris, we always appreciate your time. Obviously an important topic, a big tool for saving for retirement. We want to make the most out of our 401ks or our employer-sponsored plans.
Hey, my pleasure. Nice to be with everybody there. Stay safe, folks. And we're seeing the end of this here, so hang in there.
Visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Indexed or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract.